Going to head back to Larry Chover, Chief Investment Officer at SFG Alternatives, joining us from Chicago now. And I should mention we still have Mark Todd from FIG Securities up here on the desk with us. We're going to talk a little bit about the close we saw in the United States now and what's moving stocks over there. We did see the Dow and the S&P, Larry, managing to push into positive territory before the bell rang, and the S&P another record high there. What's sentiment like there down there at the CME Group at the moment?
Well, at the moment, I think it's panicked and I think it's confused because people are just looking for some type of negative catalyst. I mean, every move in the stock market today, people are scrutinizing it, saying, well, maybe this is the one move where we're actually going to get a correction. People keep looking for a bearish catalyst and they're not getting it. So really, Kate, tomorrow is the big one where everybody thinks that all of a sudden we're going to see some bearish catalyst come out of the FOMC in Bernanke.
Yeah, would you say Dudley's speech overnight was the most important event that was on investor minds?
You know, I think it was. I think it reinforced the fact that, hey, perhaps, this asset purchases are going to continue because, our inflation is lower than most people expect. Our jobs number isn't as good. I mean, we are adding jobs, but really on the low-paying sector, we're moving in the right direction, but things aren't moving as fastly as they should, given the fact that we're purchasing $85 billion a month in treasuries and MBS, et cetera. People are thinking that that's going to be dialed down. But after yesterday, I think people are just realizing that that probably isn't going to happen anytime soon.
Larry, what did you make of those comments out from the other Fed member, or one of the others, Evans, yesterday? Traditionally, he's a dove, but the comments yesterday were pretty hawkish. He talked about an abrupt end to quantitative easing as soon as autumn.
Yeah, it's funny because I didn't make too much light of it, and I don't think the markets did either. I mean, I think eventually there will be an abrupt end because if we do have inflation, as you know, inflation can rear its ugly head quickly, much quicker than any of us can prepare for. But right now it's under check. So I'm waiting for that to happen sometime. I don't think it's going to happen anytime real soon.
Yeah, Larry, also just want to ask you, all about Fed chatter this week, obviously, but what else are investors weighing up over there? Earnings season's over. Is it all about central banks?
Well, it is. I think it's about central banks, about the Bank of Japan. On the state side here, not too many of us are worried enough about China right now. I mean, the fact that China made it public that they are not going to be buying as much of our debt as they have before. They're going to expand into stocks, private equity, bonds, et cetera. That's going to hurt the demand just a little bit. But given the fact that our 10-year yields under 2%, not many people are worried about it right now. But overall, China does seem to be an overhang that some of us are worried about.
Larry, Mark Todd here from FIG. I was just wondering, what's your thoughts on the Japanese situation at the moment? Obviously, a very close ally of the United States and the buffer to the China story. But what's your take on their QE program right now?
Well, I'm actually very nervous about that, Mark, and I think you could agree with me. I mean, the volatility in the JGB is just stunning right now. Consider the fact that it's more than doubled since the beginning of April. We could have a VAR collapse, a value at risk collapse that we had like 10, 15 years ago, where people are putting on so much risk right now, given the volatility is so low. I just don't know if it could continue. I don't know if the economics support it. I mean, it's very, very nice to see what's happened, but when you see 10-year yields double in a matter of 6 weeks, that's troubling to say the least.
Yeah, Larry, just finally, what are you buying and selling at the moment?
Well, what I'm buying right now, I'm telling everybody they should have exposure to managed futures. No matter what it is, managed futures have not kept up with the U.S. stock market or the world stock market. However, commodity volatility is very low right now. You need to get some type of asset in your portfolio that's not correlated to the stock market. And it appears to be that managed futures is the only asset class that appears not to be correlated to the stock market.
Okay, Larry Chover, thank you so much for your time. We always appreciate it.
You're welcome.